Welcome to Know More, Risk Better, a CreditSights podcast. Across the global strategy team, we aim to make sense of the macro and the micro, highlighting opportunities and the risks facing the fixed income markets.
As the macro makes headlines, we leverage our network of experts across Fitch Solutions to better understand economic trends, rates gyrations, geopolitical events, and how these factors impact corporates.
At CreditSights, we understand that credit investing comes down to picking winners to generate alpha and avoiding losers. Our team of over 100 analysts across the US, Europe, and Asia provide unmatched sector expertise and fundamental knowledge.
In our weekly podcast, the strategy team offers a look at the conversations we have with our colleagues, including analysts, fellow strategists, economists, and leveraged finance market experts. If you want to know more so that you can risk better, you'll want to give this podcast a listen. Hello, everyone, and welcome back to the CreditSights Know More, Risk Better podcast. This is Winnie Cisar, Global Head of Strategy at CreditSights. And today we are going to infinity and beyond. No, we're not going to be recapping Toy Story 5, although with all of the headlines around that and SpaceX, I do have the most wonderful idea for a Halloween costume this year, and that would be Elon Musk as Buzz Lightyear. I feel like that would be a really good one. Anyway, we're going to be talking about SpaceX today because it has been absolutely dominating the headlines. And I have joining me today our newest space guru, Davis Hebert, head of the TMT team at CreditSights, high yield media and telecom expert, and now also learning to be familiar with all things SpaceX. And then we have Zach Griffiths, our head of US investment grade and macro strategy. And we're just going to be discussing all of these things that have been happening in the market lately as they relate to SpaceX. So Davis, Zach, thank you so much for joining me.
Thanks, Winnie. And thanks, Davis. I'm excited for this discussion.
Yeah, thanks, Winnie. Should be an interesting topic for sure.
Yeah, for sure. And Davis, I appreciate that you got the memo to wear your green shirt today, maybe in tribute to the little green men that live on Mars or whatever it is. I just finished reading the book The Martian. It was quite good. I'm probably like way late to that party considering it was already a movie, but this is how it goes. All right. So Davis, for those of us who have been, tracking the headlines, seeing all the news and the noise, of course, but aren't really familiar with SpaceX and what their operations actually do. Can you tell us, what is it that SpaceX does? I immediately think, of course, rockets and the rocket launcher chopsticks that then catch the rocket. But it seems to be a lot more than that, at least based on some of the IPO filings that had a total addressable market of, the entire universe.
Sure. Well, SpaceX, its basis is rockets. I mean, this is what started the company back 20 years ago when Elon put his profits from the PayPal sale into this company. So that is really what got the company started. But interestingly enough, the rockets business is only about 20% of revenue. So it's actually the smallest segment. And when you think about what the rockets business does for SpaceX, it really enables the Starlink business, the Starlink satellite connectivity business. That is the business that's the cash engine of the company. It's currently about 60% of revenue. And then when you throw in the XAI, the AI infrastructure business, that's going to be the second largest revenue contributor once you fold in the Anthropic and Google compute deals. So the rocket business is actually the smallest part of the overall SpaceX revenue pie currently. And if you look at over time, like what we expect, and I think this is probably the most difficult thing about SpaceX is trying to figure out how to model this company. We do think that the AI business could potentially be the largest segment over the course of the next 5 or 6 years. So that's something a lot of people are debating right now. It's how to model this company, what it looks like in the next 5 years, and I'm sure we'll get into that a little bit more.
Yeah, absolutely. So can you walk us through some of the timeline details of the past few months? There's clearly a lot going on here. We have M&A, ratings, the IPO, bond deals. It feels like there's a lot of action in a somewhat compressed window, although I do realize the runway to this it's been going on for a while now. What are the logistics here?
Well, we've known SpaceX might IPO. We actually did a Starlink deep dive a few years ago, actually, and we thought SpaceX would IPO in 2027. So it's about a year earlier than we thought. And when we did our response piece after the bond deal, we called our FAQ Fast and Furious because literally this has been on kind of rapid fire analysis. Where February you had the merger with XAI that valued that company at 250 billion. That was actually the largest acquisition. I'm going to use air quotes because it was a Elon company buying another Elon company, but 250 billion is the largest M&A deal ever. The consolidated entity at that time was valued at 1.25 trillion. And as more hype started building around SpaceX, we started to see that valuation continue to move higher in terms of what we expect the IPO valuation to be. The IPO ended up, the S1 was filed May 20th. So, we had a few weeks to sort of look at the information that was disclosed in the S1. The IPO occurred several weeks later on June 12th. That valuation was 1.77 trillion at $135 per share. Then we immediately got rating agency reports, and then following quickly thereafter, we got the bond deal that came, the $25 billion bond deal that came, that priced on June 23rd. So there's just been this rapid fire, cadence of news on SpaceX. Every outlet out there is talking about it. I like to say that it's perfect clickbait. I think media companies are putting out SpaceX content. Equity research shops are putting out SpaceX content. We're putting out SpaceX content. So everyone wants to talk about it. And there's just a lot of dust in the air that needs to settle, I think.
Yeah, that's a great point, Davis. It seems to be all our media contacts want to talk about recently. And so you kind of mentioned the valuation in terms of the IPO and how the share price has performed since IPO. I think the intraday was maybe above $210 a share at a peak. We're settling in around $165 per share today. I know you're not an equity analyst, but sort of what's your credit analyst perspective on the performance of the IPO so far? What does it mean? What can we extrapolate from it, if anything?
Well, I think that the range of pricing, as you said, 135 up to 210, back to 165. I think these are billions and billions of dollars that are just swaying one way or the other. So I think the key thing to take away is that this is an incredibly difficult company to model. We have a model. We've forecast the next 5 years. Do I have high conviction in those numbers? No, I don't know how anyone could. And as a result, because it's difficult to model, it's a very difficult company to value. When we put out our S1 takeaways, after reading through the different segments, the different disclosures, we titled our note SpaceX past, present, and then in all caps, we put future. And that's really what we're trying to value here is not what SpaceX is today, but this incredible amount of blue sky that has where SpaceX has this potential to be this incredible company that ranges from an incredibly dispersed connectivity company to a rocket launching company that has really no comparison to an AI infrastructure company that's probably the most difficult to figure out. And one thing I've learned about Elon and how he manages his companies is that he likes to be soup to nuts vertically integrated. So the satellite business, for example, most other satellite companies that I follow outsource a lot of their businesses, right? They have to depend on someone else to launch a satellite. They have to depend on someone else to build it. And so Starlink does everything from soup to nuts. And so when you look at the vertical integration of AI and rocket launching and Starlink, you start to look at this web of opportunities, and it's really hard to get your head around it. But that tremendous potential for the future is really what's being priced into the SpaceX equity today.
Yeah, I mean, so by my calculation, at $165 a share, it's around 2.1 trillion valuation. You mentioned the acquisition, quote unquote, of XAI at 250 billion. I mean, I'm putting you on the spot here, but what do you think the market is attributing to the XAI portion of that? Kind of your focus on the future. I feel like Starlink actually makes money. It's a business right now, but that's really not what the valuation is. It's about the future probably of Starlink and what it allows XAI to do. So is that really what has expanded the multiple, even in terms of these valuations from your perspective? And
Well,
what portion of that 2.1 would you attribute to XAI?
it's hard to say. I'd say that it's probably the biggest swing factor. So I think the Starlink business today, is definitely worth, I think, in the hundreds of billions of dollars. The rocket launching business, I think the rocket launching business is difficult to value on a standalone basis because Starlink and the rocket launching business are so intertwined. I look at that as really kind of one unit. So when you look at like the February deal, that valued SpaceX, which was at the time rockets and satellites, at about $1 trillion. So it's probably somewhere in that 750 billion to $1 trillion valuation for just the space piece of it, which basically means the rest of it is kind of a big swing factor on what this AI business is going to look like over the next 3 to 5 years, if not longer.
All right, so while we're just throwing around tens, hundreds of billions, SpaceX also announced that it would acquire Cursor for 60 billion. I understand that that was sort of already an option it had prior to the announcement, so it wasn't completely out of left field by any means. How does that fit into the whole story of the past? I mean, it's only been a few weeks since it IPO'd, but how does that fit into the story today?
Yeah, I think the Cursor deal was an option. I think they could, buy it with stock, or they had to cut a $10 billion check to walk away. So essentially, they ended up waving that in. Where it fits into the SpaceX strategy, I think, is coming back to that vertical integration point, which is soup to nuts. They want to own everything. So Cursor is AI coding. You're going to have the AI models like Grok. You're going to have the AI infrastructure, so they kind of control that whole value chain. But I think when you say 60 billion, that's a big number. But it's all stock, right? So if you look at that as basically a play on SpaceX equity, it really gives you a sense for how powerful this equity currency is that they have. And so one thing we looked at the enterprise values of all three of the wireless carriers, and if you add those three up, it's a little bit above $1 trillion for all three wireless carriers in the United States. SpaceX is currently valued, well above that. So there are, like, again, I think a lot of people are writing a lot of stuff, and I don't think any of it necessarily needs to be true. But a lot of people are writing that SpaceX could buy a wireless carrier, and they're trying to put T-Mobile in play, for example. And I think a year or two, you might have said that seems impossible. But when you look at the valuations of T-Mobile, which is I haven't looked at it today, but between 3 and 400 billion, and SpaceX being valued at in the trillions, uh, it doesn't seem so impossible anymore. And so that's the kind of like power that SpaceX kind of has over this marketplace right now.
Yeah, I think that the power that SpaceX has probably fits into the next topic of conversation, and that is thinking about the ratings agencies, because as the IPO process moved along, we had Moody's, S&P, and Fitch coming out with their ratings at Baa1, triple B, triple B plus. And I think that some people were kind of surprised by this. There was a lot of debate over, what the appropriate rating is. Davis, what's your take on how the agencies came out with their ratings?
I imagine it was probably one of the most interesting internal discussions for all the three rating agencies, to be honest. These are the hardest companies to rate, ones that have, I'd say, challenges on the traditional credit metric side, whether that's, gross leverage or cash burn, et cetera, versus like the optimism in the equity markets. One situation I can recall in my career is Netflix. Netflix was burning a lot of cash. They were spending a lot of money on content, and the rating agencies rated them, like I think it was initially single B, ended up moving to double B. But that's something they struggled with, and the market was valuing Netflix equity at this tremendous valuation. Ended up working out very well for Netflix. And Netflix ended up being, one of, like, in the A-rated category once they reversed that cash burn. So I think that they probably had similar, that they probably comped this a little bit to Netflix in that, look how well that worked out for the company. When it comes to IG ratings, we were initially thinking, okay, maybe they'll sort of split the difference of, like, credit metrics look like, high yield land, but the LTV looks like IG land. We thought they might come in kind of a strong double B. However, once they got this Google deal, this Google deal where Google's paying almost $1 billion per month in leasing revenue, we figured that would push them over the line. So we felt like it would probably come in triple B flat. It ended up coming actually a little better than our expectations. So two of the three rating agencies ended up rating them triple B plus, Moody's and Fitch. S&P came at triple B flat. So ended up being a little bit better than our expectations from that perspective.
Exceeding expectations. Let's hope that SpaceX continues to do so over the long term. But I think that your point around that debate of kind of the cash burn versus the optimism has also been amplified between the reality that the SpaceX business model, it's hard to tangibly break down into a specific sector, right? Like there's just so many different things. Elon likes the soup to nuts, the vertical integration. And so we have two ratings agencies looking at SpaceX as a telecom company, or at least using that as their framework, while the third one used the aerospace and defense, so more kind of a traditional industrial aligned company. How are you thinking about what SpaceX is from kind of this framework of credit analysis? And then what would be the implications of it being assigned to a different sector as you are stress testing some of these metrics?
Well, I think that we've sort of tag teamed it. Matt Woodruff from our aerospace and defense sector, and myself from TMT, and Jordan Chalfant from technology, but have all three been involved in thinking through the risk reward of SpaceX. And we figured that we would see kind of where client questions came in, where the feedback was, to get a better sense how we cover it from a longer term perspective. I think it does definitely lean heavily towards TMT, not necessarily telecom, but telecom and tech. So the telecom business, we've seen the wireless stocks under a lot of pressure. So I think for telecom analysts, they need to be aware of what's happening with SpaceX. So I feel like SpaceX definitely is in the conversation when it comes to the telecom business. SpaceX has plans to potentially disrupt the wireless industry. They've already, been involved in the broadband industry. The broadband industry has been hyper competitive, so people are worried about, pricing pressure from another competitor entering the industry. So most of our conversations from I'd say a real business perspective have been on the telecom side. When it comes to the future of the business, I think that kind of transitions back to tech, which is the AI infrastructure business. So the long-term question, I think, for where SpaceX spreads from a credit perspective end up is on the tight end. You have, like, if this all works out and SpaceX is this incredible growth story, I think we're talking about the upside being double A hyperscaler range. That's over the longer period of time. And on the downside, I think that people are looking at, okay, this has sort of a, I want to say binary outcome, but more of that risk towards Oracle, which is, if we're in this AI bubble, if et cetera, et cetera. Oracle is in a pretty bad position. It feels a little binary given how much cash they're spending, given the ties they have to OpenAI. So I think that SpaceX is kind of bouncing between those two very wide goalposts, but most of those conversations have to do with tech and telecom.
Yeah, that makes sense. And the Oracle analogy is interesting to me because when I talk to Jordan, obviously Oracle is now the biggest non-financial issuer in the IG index, and I feel like he has a somewhat out of consensus positive view, which I think is compelling. It does kind of come down to OpenAI converting on what it plans to do without getting into those details because frankly I don't know them as well as he does. It does seem like, and I think we'll get into this in a little more detail, the risk around some kind of broader DeepSeek type moment seems like SpaceX could get tied up in that, and that's a whole different consideration, I suppose, for the overall market. But where I want to go is there any more key man risk in the market than Elon Musk? And thinking about it from a governance perspective or even a maintaining the multiple perspective. If something were to happen to him, how do you even factor that into, whether it be ratings or your kind of view on the company longer term?
It's a major factor. I probably have never seen anything like it, so I don't know that there's a precedent for it. Um, when it comes to Elon, I mean, clearly we have this company that has its hands in a lot of different things. So clearly, I think Elon has surrounded himself with very talented people. What SpaceX has been able to do from a rocket launching perspective, from a satellite perspective, I can't speak as much on the AI side, but I think for those two businesses, what he's been able to accomplish with the team he has is, I would say, if you'd told me this 5 years ago, like I would have said you're crazy. Like it almost feels impossible. So I think like part of the valuation being factored into SpaceX is this Elon factor of like, he says a lot of things. They have tremendous aspirations going to Mars, for example. And a lot of these things seem impossible today. But when Elon's involved, there is that element of hope that he was called, the things he wanted to do were called impossible before, and he's pulled them off. So as for how Elon factors into it, I do think it's the key man risk is the vision of what he wants this to be. And to me, maybe he's the only person that has that vision, and I think it's pretty critical part of the story for sure. How to price that in, it's definitely hard to say.
Definitely hard to say. So I'd like to pivot a little bit and talk about the actual bond deal because that has been messy, to say the least. It's been making some headlines for perhaps the wrong reasons, in that the bonds traded significantly off pretty much right out of the gate. Davis,
Yeah.
what happened here? What went wrong?
Well, when we published our initial views on it, it definitely felt like it could go a number of different ways. I think we went with a more technical view of, this was a $25 billion bond deal. It's triple B plus rated. It trades, it was going to price incredibly wide of what we called the clean triple B comp set, the wireless carriers, for example. It was obviously way wide of the AA hyperscalers. And we felt it would come inside of Oracle, which it did. But then it traded pretty poorly. And I think what we miscalculated a little bit was more the human element, which was looking at the cash burn. Um, we saw a lot of equity models out there that were forecasting as much as $400 billion of debt on the SpaceX balance sheet. And I think credit analysts, sort of looked at those numbers and said, how sustainable is this? Am I getting paid for this risk? And there's going to be just constant new issue headwinds for this credit. So a lot of those factors came into play much more than we thought. And I think that kind of where we started this conversation was just how rapid fire this has all been. I think there's just still a ton of dust in the air. We haven't really seen this company report yet. We haven't seen like how they're going to talk to investors. Um, and I think the things we're going to be looking for is, uh, what's the level of cash burn? Because I think once we see the level of cash burn, you can start to say, okay, they're burning this much cash, therefore they're going to need to be back in the market within this time frame, and that's going to help answer a lot of questions. I think one thing we think the market has been a little too punitive on is revolves around the new issue. This company has more than $100 billion of cash on the balance sheet. They have $25 billion of debt. So, they're in an incredibly large net cash position. Um, they could, I don't anticipate them being in the market in 2026 again. You could make an argument for 2027. A lot of that's going to depend on that cash burn level that we'll hopefully get more color on.
Mhm. So, Zach, I'd love to bring you in here a bit because as the market is focusing on the cash burn aspect, it's kind of a nice relief to think about credit fundamentals again, which have felt very dislocated from valuations and the technical momentum. As you think about SpaceX from the strategy side of things, how are you factoring in the recent sell-off? We recently upgraded IG technology with our second half outlook. How are you thinking about the balancing of, some genuine credit concerns and the cash burn versus more of this sentiment related kind of trading that also seems to be very much dominating anything AI in nature? Are we just in this kind of like buy the rumor, sell the fact environment at this point?
I think the sentiment consideration, and when we think about these lofty valuations and just how much in dollar terms a percentage point swing is, I'm not so surprised that, I like Davis's context around the bond deal. And I mean, the net cash position is interesting. Clearly, credit investors are looking through how quickly they could go through. And Davis, I think when you and I talked about this a couple weeks ago, 30 billion annually cash burn, perhaps it doesn't give you a ton of runway on a 90, 100 billion net cash position. So I do think there is some fundamental consideration. Analysts are attempting to overlay some fundamental consideration to what is truly a sentiment driven event and valuation holistically. I think we can all agree on that for right now. And so when I factor it into our IG view and where things stand today, I do think that for now, we're in this strong technical environment. Talking to Jordan, it seems like the hyperscalers, maybe there's one more somewhat large US dollar deal this year. Obviously, there's plenty more to come in 2027, but I think that could contribute to a continued technical tailwind type period. We've already digested over 1.2 trillion in the US IG market this year very well. Spreads are at 75 basis points, give or take, in US IG. And I think I heard someone on TV say that it's traversed a 5 basis point range over the past 2 to 3 months, thinking about the amount of relative calm in the market and our measure of volatility in terms of credit spreads for both IG and high yield. Looking at a 20-day rolling window and annualizing that, it's around the lowest levels. So I think that overall, the technicals are robust and fundamentals, while perhaps being considered a little bit more acutely on this bond deal, are in good enough shape for now that they're not a concern. And I think that was something that we had highlighted as potentially moving more toward the front of investors' minds when thinking about how heavy CapEx will be and how the hyperscalers are going from funding that internally with operations to debt financed. We just haven't hit that inflection point where there's really a lot of concern yet. And I think it's got to be out there in the future. Is it in 12 months, 36 months? I think that's really where timing it is difficult. So that's kind of my perspective. Davis, I mean, are these bonds a buy now then? Or is it kind of catching a falling knife? And that's kind of never the right strategy if you're a long-term investor, at least.
There's a lot of debate going on with this name right now. I mean, it feels like people in the credit market, people want to comp SpaceX to Oracle. I feel like SpaceX, when you look at the two businesses where they have an established presence, let's say, um, the rocket launching business, no one else can touch them. Like no one else is even close. Starship is sort of the keys to the next kingdom, if you will. So I think once that is operational and successful, that's where the blue sky becomes more real. And so I think that's something we're watching for sure is the Starship launch. As for the tech sector, I think that what we've seen in the past couple of weeks is maybe a little bit of fatigue. I think we've seen just tremendous new issue. I think that the market has to digest that. You mentioned time frames. I think what's interesting to me is looking at all these data center deals that are coming due in 2030, 2031. A lot of the core weave debt comes due 2030, the early 2030s. So it does feel like, there is a wall at some point. It may not be right in front of us, but that's something to consider.
Yeah, absolutely something to consider. So if the wall is a few years off, at least for some of the data center aligned issuance, how are you thinking about kind of the next most important catalyst from a SpaceX perspective? You definitely highlighted the Starship story and the next flight there. But for credit investors and kind of the broader market, are we looking at the first earnings print? Are we looking at the prospect of another new bond deal at some point? When do you think we will have a better sense of certainty that the credit story is either on or off track?
Yeah, I think one of the challenges of the price discovery in this case is that SpaceX really didn't give us a lot of guidance on CapEx and cash burn. So we along with everyone else were kind of left in the dark on that. So I think that there I don't know that there's even a consensus estimate. It's sort of all over the map. I've seen CapEx levels as high as 80 billion. I've seen CapEx levels as low as 30 billion. So I think this first earnings cycle will tell us a lot. I think like from the human aspect is like how is SpaceX going to message to investors, right? Are they going to provide more clarity, or are they going to keep us guessing? I think that's going to be a factor. When you look at the cash burn for this quarter, I like the next analyst. I'm going to look at the cash burn, and I'm going to annualize it, and I'm going to like compare it to the amount of cash they have, and start to think about runway and how much time they have before new issues. So I think this next earnings cycle is going to be critically important for the story. Like again, also looking for any success on the space on the Starship side as well.
Well, I wanted to ask you about that, Davis. Is that risk all downside? As in, is successful Starship priced into the valuation today, you think? And therefore, there's only room for downside surprise or multiple compression, whatever you want to say.
Well, as I said, when the S1 came out, it was past, present, future, all caps. That absolutely is tied to Starship. So is Starship priced in? Yes, absolutely. And so, whether a success or failed launch causes volatility, I think it depends on the messaging. I think if SpaceX says, "Hey, this was an important step forward," I think that probably dictates how bonds and the stock react. We don't have a date yet. I mean, I think it's like this month or next month for the flight 13. So we'll see.
We will see. So, Zach, what are you looking at from the macro and market level to assess some of the SpaceX takeaways and that read through to the broader market? How are you thinking about the story?
Yeah, I think what'll be interesting for us is maybe to track SpaceX spreads to something like Oracle and trying to separate, just typical market beta from the more idiosyncratic considerations of the overall AI build out and how people are thinking about the balance of risks. And so I think it will be difficult, but that's kind of what pops into my head as an interesting way to analyze it. And I think even more simplistically, if the bonds were to continue trading poorly in what is a remarkably stable or financial market environment, I kind of mentioned measures of volatility and credit spreads, credit spread levels. You're kind of seeing that across markets generally, even though there have been huge events in 2026 as a whole. Markets have performed pretty well in general. Fixed income has been stable. I'd say the total return, excess return backdrop is not super robust, but I think surprisingly resilient in the face of everything else that's been going on in the world. And so I think that could be a leading indicator if the bonds continue to trade poorly of an assessment that maybe, upcoming earnings are not going to support sort of what we see in terms of equity valuation. There might be more downside there, but I mean, there's a lot to try to factor in and maybe isolate in terms of these factors and how important they are for valuations and overall market sentiment.
I was going to add too that the when you look at the reaction in the equity markets for the wireless carriers, it's been tremendously negative since the SpaceX IPO on this anticipation that SpaceX is either going to acquire one of the carriers or tremendously disrupt them. This is a business that's very mature, it's high priced, et cetera. And so you have that on the equity market on that on the one hand, but then on the credit market side, it seems like people are more skeptical of that. The carriers trade considerably tighter than SpaceX. So it just seems like there's there's a lot of disagreement across the credit spectrum, or credit and equity spectrum on where this shakes out.
Absolutely. I mean, I think that that's been the big takeaway of so much of this is credit and equity are very conflicted in a lot of their signals and their motivation and their analysis. And that always comes back to the infinite upside associated with equities and trying to protect to the downside associated with the credit investor mandate. I have one final question for both of you. Davis, if offered, would you take a ride on Starship?
Ooh, I'd say no. I'm afraid of heights.
Zach, how about you? You going to space on Starship?
Well, am I going to Mars or can I like just go up and come back like Bezos and those fellas?
Do the little moon wave fly by?
Yeah, I'm not going to Mars. I think that would
You're not
kill
going.
me. But maybe I would go for a little joyride.
Or you come back and your son's ready to go to college.
Yeah, see that I'm not interested in missing out on too much of life down here on Earth.
Fair enough. I too will happily stay on terra firma. Unless things go really sideways in my life, I don't think that I'm going to be headed to outer space. But I commend those people who are fascinated by it and want to explore the universe. I think it's really cool. I just don't want to do it. I will happily read your books. That's about it.
It is exciting. I mean,
It is exciting.
it's got to be one of the easiest companies to get excited about in history.
Yeah, for sure. For sure. All right. Well, I think that on that note, we should wrap it up. Davis, thank you, as always, for giving us such tremendous insight into a very complicated but fascinating story. Zach, I appreciate your macro and IG perspective. For everyone listening today, thanks for listening. We always love hearing feedback, or if you have questions for us, you can reach out to us using the Ask an Analyst feature on the CreditSights website, or, of course, reaching out to your CreditSights or Fitch Solutions sales representative. Hope everyone has a great one.
CreditSights disclaimer. All price references correspond to the date of this recording. This podcast should not be copied, distributed, or reproduced in whole or in part. Neither CreditSights nor its affiliates makes any representation or warranty as to the accuracy or completeness of any information contained in this podcast. CreditSights is not providing investment, legal, accounting, or tax advice, is not providing research or making any recommendations, nor is CreditSights offering or soliciting any transaction with respect to the purchase or sale of any security. The receipt by this listener of this podcast is not the giving of advice by CreditSights or its affiliates.